Nike just released its latest earnings report, and the results are making waves. Revenue is down, profit margins have taken a hit, and competition in the sneaker market is fiercer than ever. But despite the setbacks, investors are showing renewed confidence. The company is facing real challenges from rising tariffs and shifting consumer trends to questions about product innovation. Yet, under new leadership, Nike is pivoting hard. They're scaling back hype releases, doubling down on performance gear, and reshaping their entire strategy for the future. In this video, we'll take a closer look at Nike's most recent financial results, unpack what's driving investor optimism, and explore what the road ahead might look like for one of the world's most iconic brands. Nike's Q4 numbers are out, and at first glance, they're tough. Revenue dropped 12%. Earnings per share came in at just 14 cents. Their digital business saw a 26% decline, and gross margins took a 440 basis point hit. By all traditional metrics, it was a rough quarter. But what makes this earnings call different is the message behind the numbers. Nike's new CEO, Elliott Hill, says the company is in the middle of a transformation, and that transformation is starting to gain traction. At the center of this shift is a bold recovery plan called Win Now. It focuses on 5 major pillars: culture, product, marketing, marketplace execution, and team discipline on the ground. Over the last 8 months, Nike has reshaped nearly every part of the business. Leadership was streamlined. 11 of the CEO's 15 direct reports were replaced. Teams were realigned not by gender or category, but by sport. From running to basketball, from golf to global football, Nike is building sport-specific innovation teams to create products that perform, inspire, and connect deeply with athletes. And the early signs of this shift, they're promising. Nike's performance business, especially running, is leading the charge. The Vomero 18, launched just 90 days ago, already generated over $100 million in revenue. In basketball, the debut of Aja Wilson's A1 sneaker sold out in just 3 minutes on Nike Digital. Their women's basketball line expanded by more than 50% year over year. Another big change? Nike is returning to its roots, re-engaging with retail and wholesale partners in a big way. Under the previous strategy, Nike had pulled back from many third-party retailers to focus on direct-to-consumer and digital sales. But that model created friction with partners and made Nike too reliant on its own online channels, which have struggled with traffic and promotions. Now the company is course-correcting. They're expanding presence in stores like Dick's Sporting Goods, JD Sports, Urban Outfitters, and launching a select Nike brand store on Amazon. They've also entered over 200 new women's-led retail locations, including boutique chains like Aritzia. This shift puts Nike's products where consumers already shop, boosting reach and full-price sales and protecting the brand's premium image. They're also rethinking how they show up in the marketplace. No longer focused solely on hype drops, Nike is aligning key launches with major sports moments and local activations. During the French Open, for example, Nike saw a 30% jump in sell-through after spotlighting outfits worn by Alcaraz and Sinner across Nike Digital. But the journey isn't without headwinds. One of the biggest challenges Nike faces right now is a new wave of U.S. tariffs on Chinese imports. Roughly 16% of Nike's U.S. footwear still comes from China, and these new tariffs are expected to cost the company around $1 billion. To soften the blow, Nike is raising select prices in the U.S., shifting more production out of China, and working closely with suppliers and retailers to manage costs. Another major focus this quarter was inventory. After overstocking during the pandemic, Nike found itself weighed down by excess product, especially in legacy franchises like the Air Force 1, Dunk, and Jordan 1. In the fourth quarter, Nike accelerated efforts to liquidate inventory through value channels and outlet stores. Inventory units dropped across Europe and China, and global inventory ended flat year over year, a major improvement. By the end of the first half of fiscal 2026, Nike expects to be in a healthy and clean inventory position, ready to relaunch with fresh product lines and stronger margins. Digitally, traffic remains soft, and that's by design. Nike is repositioning its online presence to focus on premium experiences and full-price sales, instead of relying on heavy discounting. This reset is expected to weigh on digital numbers in the short term, but should support brand strength in the long run. Across regions, progress is mixed but improving. In North America, wholesale is stabilizing, Nike Digital is returning to a premium model, and product freshness is improving. In Europe, performance categories like running and training are growing, while sportswear is beginning to diversify. In Greater China, revenue fell 20%, but Nike is making structural changes, refreshing store formats and tailoring local strategies to rebuild long-term momentum. So, what does the road ahead look like? Nike expects another small revenue dip in Q1, but believes the worst is behind them. Holiday wholesale orders are already trending up. Inventory is leaner and product innovation is gaining momentum. Performance is back at the center of the brand, and investors are noticing. CEO Elliott Hill closed the call with a powerful metaphor, comparing Nike's comeback to Rory McIlroy's Masters win. After years of missed shots and near wins, Rory finally secured his green jacket because he embraced the pressure and stayed aggressive. Nike is aiming to do the same. The message is clear. Nike knows it's in a fight. They understand each region, each sport, and each consumer presents a different challenge. But with a renewed focus on innovation, storytelling, and strategic execution, the swoosh is far from finished. In fact, the next chapter might just be their most competitive yet. I own Nike stock, and I believe in their long-term vision. Yes, the numbers this quarter were tough, but sometimes that's exactly when opportunity shows up. Under new leadership, Nike is making the right moves, scaling back hype, putting performance first, rebuilding key partnerships, and sharpening their strategy in every market. They're not trying to be trendy, they're trying to be timeless. And that's exactly why I think Nike is setting up for a strong recovery. Sure, there are challenges ahead: tariffs, shifting consumer habits, and fierce competition. But Nike has the scale, the brand, and the discipline to push through. The way I see it, this is a company in transition, not decline. And for long-term investors like me, I believe Nike is a buy. If you found this breakdown helpful, don't forget to hit like, subscribe, and turn on notifications so you don't miss the next earnings deep dive. I'll be following Nike closely in the quarters ahead, along with other major brands navigating these changing markets. Let me know in the comments, are you buying Nike at these levels or staying on the sidelines? Thanks for watching, and I'll see you in the next one.